Hey, it's Anthony Meisner with Land Title. Came to bring you your Boulder County update for the month. So let's dive right into this. I think one of the things we need to look at mostly is just what's happening with inventory, because as inventory changes and inventory sort of trickles down as people pulling stuff off the market, it's really abnormal seasonal behavior. We usually see our peak of the market in maybe August or September. Here we are with the peak came back in June, and we've pulled so much housing off the market month over month that now active units are nearly the same as they were a year ago on a really high inventory time. So fourth quarter truly is not nearly as difficult to sell as it was before. Now, this is interesting because prices have compressed a little bit in a lot of the markets, and that has really brought buyers back to the marketplace. Also, interest rates are just a little more attractive than they were this time last year. So we're starting to see a little bit of momentum. Now, year to date, we're only up 4% in sales, but last month, year over year, 5% increase again. The solds were up 10%. Average sales price, it says 3.88%, which could be possible because a lot of the median is very stagnant and stable, but definitely certain parts of the marketplace are suffering. So when we look at where all that inventory is actually at, you can see very similar inventory levels in places like Boulder, 650 units on the market. It's tough, right? There's just a lot of sellers. Erie's still sitting with high inventory at 238. Lafayette, very similar inventory to this time last year, 110. Longmont actually has a little bit more inventory on the market at 410 with 7% more. But the real shifts in the marketplace are Louisville finally is starting to come down a little bit with Superior. We had some of those Marshall Fires rebuilds that got on the market, and we've definitely seen some of that trickle down, but we still have a high level of inventory in both of those marketplaces. And the one that is kind of surprising is Niwot, actually, because of the luxury price point. The luxury market has about 10 more units than usual, which is 37% more inventory. So active units, very, very similar outside of those couple of marketplaces. Now, if we want to talk month supply of inventory, this really means like how do buyer and seller favor, right? The bulk of the markets, right? Most of Boulder County is Louisville, Lafayette, Superior, Erie, Longmont. All of them are still sitting right around that 3 months of inventory range. That really tells me it's fairly in balance outside of some concessions that are maybe abnormal. Those markets are much closer to buyer and seller being on even footing, where the city of Boulder is still at 5 months of inventory and detached. Niwot, because of the luxury price points, at 7. They're definitely more buyer favored marketplaces, which, I mean, for better or for worse, is kind of what we're in right now. Now we get to attached, very different story. We have over 4 months of inventory in most of these marketplaces. It feels like a very buyer focused market, right? Buyers have all the cards. Sellers are just hanging out and waiting for a buyer to show up in so many ways because the inventory levels are so high. The only one that really is an anomaly here is the city of Erie, and Erie on the Boulder County side only has 3 months of inventory. So we're talking newer townhouse stuff, very similar to what you're experiencing on the detached side. So definitely some nuances to the marketplace, which is why I always do this for you. But days in MLS, this kind of tells the story too. When we're combined and you're looking at all the units, even though we've had way more inventory in Niwot, the really good stuff is very clearly selling in the luxury market right now. 19 days in MLS there. The market with the highest days in MLS is actually Lafayette this month with 79. Last month, we saw Superior way higher, but those still are kind of the two slowest moving markets in this area. Longmont continues to take the cake, right? It's just a faster paced market, lower inventory, lower price point, so more buyers can participate. 35 days is all to go under contract. Now, if we look at it by price range, this is really how is it favoring in each individual section, right? And, for above 2 million, we're really seeing more sales take place finally. Last year was a very tough year. 23 was a tougher year. But this is interesting because as we've been in this position where we have, more sales consistently taking place, it's not because, buyers are coming out of the woodwork. It's finally because prices have compressed enough that you're really starting to see buyer appetite, feeling like this is a good deal. And finally, they're getting frustrated enough that people are just buying houses anyway. Also, Boulder County, or specifically the city of Boulder too, are in a unique position with all this stuff going on where it's just a much more desirable nationally than it has been in years past. So luxury, awesome, that's doing great. Very similar behavior through most of the median and average price ranges. The only place that's still struggling a little bit, here we show 1.5 to 2 million, but I'd argue 1.3, maybe to 2.2 million. we're still really seeing when with a high loan volume, it's just a very expensive purchase. So we're just not seeing as many sales in that price range. Now, let's take a look at it by month supply of inventory and days on market by price range, because we're going to look at this detached first, because the picture is so different, right? Now, if we look at it in the luxury price points, it's just so much inventory. We have like 280 units, over 2 million on the market right now. It's taking a long time to sell stuff, but the really good buttoned up stuff still can sell fast. But that doesn't mean we aren't selling more stuff, right? We are selling stuff that's been on the market for a while. As prices have gotten more realistic and people started to bring those down, they are going under contract. So that's a really good sign. Anything though under that 1.5 million mark, you're talking less than 3 months of inventory in most cases, and they're going under contract in 44 days. So this is definitely a market that is moving. It's just kind of slow and steady. Now, if we look at it from the attached perspective, the opposite of that would be true. 5 months of inventory. It's taken a lot longer to sell. Sometime between 45 and 80, 90 days on market is probably to be expected. The luxury market acts like luxury and detached. You got a lot of lock and leave condos, really neat places that people are buying. They may not be on the market very long. So you're definitely seeing luxury doing luxury, which is very different. If we need to have a conversation about average sold price, let's start with detached. Now, the city of Boulder over the last 12 months has been super stable. We're showing nearly 0% change. Now, year over year or month over month, it does shift quite a bit in the city of Boulder. So that's why I like to look at the average of the averages. I think if you're looking at a consistent trend of where the average sales price is across the county, you can see in this 4-year view that it's nearly flat, right? We've never quite hit that peak again like we saw in 2022, but we really are sort of just treading water, right? There's definitely some down months and some up months, but really, really stable, I think, is sort of the consistency. Now, we've seen large price rises in Louisville and Superior because of those Marshall Fire rebuilds. And finally, some of that's settling out and we're starting to see some consistency. A lot of them are mostly done and they've sold, but most of the places like Lafayette showing a little bit of that price settling, right? Down 4%. Longmont's down about 1.3% over the last 12 months. Erie, very flat, minus 0.4%. So we really are seeing a little bit of price settling, but also, a lot of stability in this marketplace that you really don't get in a lot of other markets. The attached market, on the other hand, has been a mess, right? We've been seeing the steady erosion. We had some incredible peaks in 2022, and we're just not getting back to those numbers. And we've seen a slow erosion from, 650, 700 in some months, down to where we're sitting now at 550, even lower. September was a pretty good month, but we did see some cool luxury sales. It does help weight that average up. And if you look at it by area, definitely more stable in the city of Boulder, but we've really seen price erosion in places across the county. So attached, tough; detached, super stable, I think, is kind of the big takeaways. Now, the one positive thing I think you can all go talk about is you can just look at how finally we're starting to see more confidence from buyers getting out in the marketplace. Even when we're talking about government shutdowns and higher unemployment rates and all the stuff happening around us, you really are starting to feel it here in the sales numbers where buyers are sick of waiting on the sidelines. It's gotten slightly more affordable all year long to go purchase a house between the sales price is coming down just a little bit and the cost of money is coming down. So now all of a sudden, year over year, we had almost 10% more under contract or more solds in September than we did last year. So year to date, that puts us 4% up. Most of the markets are just slightly up, but it's nice to see buyers starting to build some momentum, which hopefully that stays, right? We just don't know, but it's very tied to the cost of real estate. So percentage sold price to list price is the last one I have for you. This is a tough slide because it should tell you that, on average, a seller is getting 97.65% of their sales price. But the real issue is it doesn't take into account price drops and it doesn't take into account concessions. And concessions are 68%. Almost everything with a loan is getting concessions right now between 500 and a million. So most of that. The issue with that is without that being factored in here, this is drastically lower than it really is. But what this slide does tell us, and it does tell us fairly effectively, is over the last year, sellers are getting a little bit less for their home, right? You can see over the year-over-year change, 0.4% drop, 0.95% drop from 1 to 1.5 million, right? Most of these numbers are slightly negative. That means you're getting just a little bit less than you would have a year ago because there's just more inventory and more to choose from. So hopefully that helps. If you need other information, you need other market data, I'm always happy to help. Don't forget to like and subscribe to the YouTube channel. Catch you next time.